Hello, so today we are going to start with examples and case studies about cost approach to valuation. Theory part we have already covered in previous session, which was carrying 7 marks. At least 2 to 3 marks of numerical are must out of this topic, and sometimes a case study of maybe 8 marks or maybe sometimes 12 marks may come out of it. And the concepts we are going to discuss, it will help you in other topics also. So this theory part we have already covered in previous session, and today we will focus on examples and case studies on various methods of cost approach to valuation. So just for reiteration, quickly we'll go through the formulas which we have already discussed and derived with the logic in last session. So first method of depreciation is straight line method, and this is the formula for calculating annual depreciation as per straight line method. This is the second method of depreciation, which is also called percentage constant method or constant percentage method or linear method, WDV method or declining balance method. So this is the formula which we discussed in last session. We will apply all these formulas in today's session. Third method of calculation of depreciation, about which numerical is must, at least 1 or 2 marks of numerical is must out of this slide. So this is the formula for sinking fund method for calculation of depreciation and depreciated cost, the concept we discussed in the last session. So as per this method, first we have to calculate SFF, sinking fund factor, then APA we have to calculate for the age of the building, and then total percentage depreciation, which is equal to SFF into APA into 100. We will try to understand this method with the help of an example, and we will also see if scrap value is given or not given in the case, how to calculate the depreciated value of the building. Calculate, then the fourth step is calculation of depreciation amount. This we discussed in last session, and then present value or market value of the property, or DRC, depreciated replacement cost of the building, using replacement cost minus depreciated amount. So fourth topic, the method of calculation of depreciation which we discussed in last session was of sum of digit method. So this method gives us lower rate of depreciation in earlier year and more rate of depreciation in later year. So these are the two formulas for calculation of depreciation in a particular mth year, say in 10th year, and this formula gives us the depreciation, cumulative depreciation for the certain period, say up to 10 years. So let's start with the examples. Example number 1, it is a load bearing structure. Age of building is 8 years and total life of the building is say 60 years. Calculate cumulative depreciation for the building. So by SLM method, straight line method, assuming salvage value of 10%, and second question is by constant percentage method. It is also called WDV method, also assuming annual depreciation rate of 1.5%. So as I always say, first you always try to write whatever data is given in the question, irrespective of the fact whether that data is relevant for the solving the problem or not. So we have to write entire data in our own language, right? Then we have to write what question the examiner has asked. Then we should start our numerical solving. So using SLM method, we have already understood the formula for calculating annual percentage depreciation, which is equal to 100% minus salvage. It is given in the question is equal to 10%, and total life of the building, which is also given in the question, is equal to 60 years. So annual depreciation as per SLM method for the building will be equal to 100 minus 60 100 minus 10 divided by 60 years is equal to 1.5% per year. So thus total depreciation for 8 years, which is the age of the building, is equal to age of the building multiplied by annual depreciation, which we have calculated above. So it is equal to 8 years into 1.5% per year. So that means we will get cumulative depreciation of 12% for the building of age 8 years. So next method as per which we have to calculate the depreciation is WDV or constant percentage method. So if annual depreciation is D, say for example, that means depreciated value of building is equal to 1 minus D raised to power m. So that means since 1.5% of annual depreciation is given in the question, so that means depreciated value of the building after 8 years will be equal to 88.62% of RCN. RCN is replacement cost new. Right, so that means percentage cumulative depreciation for 8 years will be equal to 100% minus what is the depreciated value. So as we had understood in the previous session, that depreciated value is equal to replacement cost minus depreciation amount. So here we have been given RCN say 100%, and depreciated cost is we have calculated here through this formula, which is 88.62%. So if we reduce depreciated cost from the RCN, we will get a depreciation amount using the formula which we discussed in the last session. Example number 2, it is a load bearing structure of 20 years old. Plinth area is 1275 square feet. Replacement rate is 1650 per square feet. What is the depreciated value of building? Assume life of the building is 60 years and salvage value 10% by adopting SLM and constant percentage method. So here we will try to solve all the problems with the help of both methods, SLM and constant percentage method. So 1 or 2 marks theory question may come out of SLM or constant percentage method. Sometimes a case study may also come, and normally it comes from either mix of these two methods or maybe using all 3 methods, and sinking fund method case study also come. So let us first write down the data available in the question, given in the question. It is age of the building, which is M, is equal to 20 years. Plinth area has been given, which is equal to 1275 square feet. Replacement rate has been given in the question, is equal to 1650 per square feet. Life of the building has been given 60 years, and also salvage value as a percentage of RCN is given, which is equal to 10%. So we have to calculate depreciated value. So I repeat, depreciated value, not depreciation amount. So we have to understand that what exactly examiner is asking here. The examiner is asking depreciated value using SLM and WDV methods. So first of all, we have to calculate replacement cost. Since depreciated value is required, so we will be required a replacement cost of the building, which is equal to area into replacement rate. So area is given in the question, which is equal to 1275 square feet, and replacement rate is also given in the question, 1650. If we multiply these two figures, we will get replacement cost new, or RCN, or replacement cost of the building, which is equal to 21.04 lakhs. So this is the first step. This replacement cost we will use in both the method SLM and WDV. So SLM, as per SLM method, annual depreciation we know how to calculate. It is equal to 100% minus salvage divided by life, which is N. So here salvage is 10% and life is 60 years is been given. So annual percentage depreciation as per the SLM method is 1.5%. That means since age of the building is 20 years, which is given in the question, so total depreciation for 20 years of the building will be equal to 20 years multiplied by 1.5% per year. That means 30% for cumulative depreciation for the 20 years. So depreciation amount or depreciation cost we can calculate, which is equal to 30% of the RCN. Replacement cost we calculate here. So 0.3 into 21.04 lakhs is equal to 6.31 lakh rupees is the depreciation amount or depreciation cost. So depreciation, it is not depreciated. Depreciation cost we have calculated. Then we will calculate depreciated value, which is equal to or depreciated cost can also be said. It is equal to replacement cost new or RCN minus depreciation amount or depreciation cost. It is equal to 21 lakh 4,000 minus 6.31 lakhs. Then it is equal to 14.73. So this is answer number 1. Depreciated cost of the property or depreciated value of the property using SLM. Using constant percentage method, this formula we have already understood, that the value of property after M year is equal to this formula. So for derivation, you please refer to the last session on cost approach to valuation part 1. Link is given in description box below. So you can straightforward use this formula, and C is RCN, salvage value is value of salvage value in absolute terms, and C is RCN. M is existing age of the property, and is life of the property. So 21.04 lakh rupees is RCN, which we calculated in the last slide, and that means salvage value is 10% of the RCN. It is equal to 2.104, and again RCN is given. So 20 year is given in the question, 60 year is given in the question, life of the building. So by solving this numerical, we will get a value of 9.76. So as per WDV, depreciated value or DRC value of the property is 9.76 lakh using WDV method. Next example, a built up area of ground floor building is 5,000 square feet and carpet area is 4,000. Plot size is 10,000. So what is FSI and what is plot coverage? So 1 mark question can come out of this numerical. Data given, built up area of ground floor or total built up area, both are one and same thing. So that means it is given in the question is equal to 5000 square feet. Carpet area is also given in the question. Plot area is given is equal to 10,000 square feet. Now we have to calculate FSI and plot area. Let us see which data is required for solving this problem. There could be possible some data is given extra just to confuse the IBBI aspirants. So for FSI we know formula, and we discussed this formula in our case study and example session on joint venture in last session. Link is given in the description box below. So FSI formula is equal to total built up area divided by total plot area. It is equal to 5000 square feet is total built up area given in the question, and total plot area is given 10,000 square feet. So carpet area is not supposed to be used here. Carpet area given just to confuse the aspirants, right, applicants. So FSI is equal to 0.5. And what is plot coverage? It is ground floor covered area. So in case of FSI we take total built up area, ground first, second, because here in this case only ground floor construction is there. That is why ground floor coverage and total built up area both are same. However, for plot coverage we have to consider built up area of the ground floor only. There is a difference between these two factors. So ground floor covered area, here in this case ground floor covered area and total built up area both are same thing. So plot coverage is equal to total covered area divided by plot area is equal to 5000 square feet is total covered ground floor covered area given in the question, and plot area 10,000 square feet is also given in the question. So plot coverage is equal to 50%. Let us take another example just to understand with the help of a multi-story building. So G+1 building. So here a building of 8,000 square feet, ground floor and first floor both are having 4,000 square feet of built up area on each floor, is existing on a land piece at measuring of 8,000 square feet. What is the FSI and plot coverage? So here we have been given two floors, ground floor and first floor. Ground floor built up area is 4,000 square feet. First floor built up area is again 4,000 square feet. Total built up area is ground floor plus first floor is equal to 8,000 square feet. It's given in the question, and total plot area is also been given in the question is equal to 8,000 square feet. So FSI and plot coverage we have to calculate. So FSI formula we know, total built up area is given is 8,000 and plot area is also 8,000. So FSI used for this property is 1. However, for plot coverage, built up area of ground floor is equal to 4,000 only, because for the remaining 4,000 in the first floor. So we have to consider built up area of ground floor only divided by plot area, which is given as 8,000. So here plot coverage is 50%. Next example, building area is 1,200 square meter. Age of building is 25 years. Life of building is 50 years. Salvage value is nil. Plot area is 2000 square meter. Land rate is 8,000 rupees per square meter. Replacement rate is 25,000 rupees per square meter. Calculate property value using SLM and WDV method. So this is the data given in the question. Total built up area has been given in the question, which is equal to 1,200 square meter. Age of the building M is given in the question is equal to 25 years. Life of building, total life of the building is N, 50 years. Salvage value is nil. Plot area given in the question is 2000 square meter. Land rate is given 8,000 rupees per square meter, and replacement rate is also given 25,000 rupees per square meter, and we have to calculate property value using SLM and WDV method. So first of all we have to calculate replacement cost of the building and land value. So replacement cost is equal to building area, total built up area given in the question, and replacement rate. Both figures are given in the question. So if you multiply these 1200 rupees, you will multiply by 25,000 rupees per square feet, we will get total built up total value of the building is equal to replacement cost of the building is equal to 3 lakh rupees. So land value is also given in the question, which is equal to land plot area into land rate. Both figures are given, so that means total land value is equal to 1 crore 60 lakh rupees. So first let's solve this problem with the help of SLM method. So as we have already understood that as per SLM method, percentage annual depreciation is equal to 100% minus salvage divided by life. So here salvage given is 0% in the question, and life of the building is given as 50 years. So annual percentage depreciation as per SLM method is 2%. So since present age of the building is 25 years, so that means cumulative depreciation as per SLM method for 25 years will be equal to 25 years multiplied by 2% per annum annual depreciation using SLM method, which is equal to 50% of the property value, depreciated value. So depreciation cost we know 50% of the replacement cost, which we calculated in the last session, last slide. So that means 50% of 300 lakh rupees, 3 crore rupees, it is equal to 150 lakh rupees is the depreciation cost or depreciation amount. So that means we know how to calculate depreciated value of the building is equal to replacement cost or RCN new minus depreciation amount or depreciation cost. So 300 lakh rupees we calculated in the last slide, and 150 lakh rupees as calculated here above. So it is equal to 150 lakh is the depreciated value of the building. So land value we have already calculated in the last slide, which is equal to 160 lakh rupees. So total property value is equal to land value plus depreciated value of the building, which is equal to 160 plus 150 lakh rupees. So that means 310 lakh rupees is the total property value using SLM method, straight line method. Next method is constant percentage method or WDV or linear or method. So since salvage value given in the question is 0, so we can easily assume, we have to assume that annual depreciation for the building is 2% as calculated in SLM method. So depreciated value of the building is equal to RCN into 1 minus D raised to power M. So D is annual depreciation, which is equal to 2%, and M is given in the question, which is equal to 25 years. So depreciated value will be equal to 300 lakh rupees. We multiply by this factor. So 1 minus 0.02 raised to power 25. This is equal to 0.603465. So this is the total depreciated value of the building using WDV method. So now land value we have already calculated in the previous slide. So property value is equal to land value, which is equal to 160 lakhs, and depreciated value of building as calculated above using WDV method. Then total value of the property is equal to 341.04 lakhs. Next question, calculate life of building assuming salvage value of building is 10% and assuming WDV depreciation rate at 2.5%. So here salvage is given, salvage value is given, and WDV method is given, and total percentage is also given. So salvage is 10%, annual depreciation given in the question is 2.5%, and it is also mentioned that we have to follow WDV method. So we have to calculate life of the building, which is equal to N. So let's assume RCN of the property is 100 rupees because value is not given, so we have to take certain assumptions. So let us assume that replacement cost new of the building is 100 rupees and life of the building is say n years. Since salvage is given in the question, which is equal to 10%, that means salvage value in absolute terms will be equal to rupees 10. So if we will put use this formula, salvage value is equal to RCN multiplied by 1 minus D depreciation raised to power n, which is life of the building. So this is simple compound interest formula. So rupees 10, salvage value is equal to rupees 10 given in the question. Rupees 100 is RCN that we assumed, and 1 minus 0.025 it is also given in the question, and n we have to calculate. So exact methodology to calculate is a log technique, which is given in the question, like n is equal to, you can use this formula. However, a quick trick is that you just put up all four figures. You might have given four options in the question. Try to put those four values of n in the question and try to solve this equation with the help of Excel or calculator. So with that you can easily calculate. Otherwise this is a little bit difficult to calculate with the help of simple calculator. So the correct answer is 92 years. Work out depreciated replacement cost DRC. Examiner may use word DRC also of building if total life of the building is 60 years, n is given 60, replacement cost is 2.5 lakh, and age of the building is 10 years, and rate of interest is 4.5. So replacement cost is given, age M is given, rate of interest IC is IS also given. So life of the building is given, age of the building, replacement cost, and interest rate is given, IS. So this is a sinking fund. We have to use a sinking fund because IS is given. So okay, first step we have to calculate ASF or SFF using this formula, which we discussed in last session, and also in fourth session of evaluation of real estate we discussed the derivation of this formula. So the SFF will be equal to interest rate is given in the question 4.5%. So with this formula, this is the ASFF. Then we have to calculate APA. So which is equal to accrued amount of depositing rupees 1 for M year, where M is age of the building. So it is equal to I plus IS raised to power M minus 1 divided by IS. So rate of interest is given in the question, then this factor will come equal to 12.288. So percentage depreciation till mth year is equal to SFF into APA into 100 by 100. So total 4.245% is the depreciation of the building till mth year, cumulative depreciation which is given. So that means depreciation amount is equal to this depreciation amount we have calculated multiply by replacement cost, which we calculated in the previous slide and given in the question rather, which is equal to 2.5 lakh rupees. So depreciation amount of the building is 10,611 rupees. That means DRC of the property is equal to depreciated replacement cost is equal to replacement cost given in the question, which is equal to 2.5 lakh rupees, and minus depreciation amount, which is we have calculated in step number 3, is equal to 10,611 rupees. So depreciated replacement cost of the building or the property is 2,39,388 rupees. So next question is work out depreciated replacement cost of building if total life of the building is 60 years and replacement cost is 2.5 lakh rupees. Age of the building is 10 year, rate of interest is 4.5%, and assume scrap value of 10%. So this numerical is exactly same as compared to the example number 7. However, here one additional information is given pertaining to scrap value. So scrap value and salvage value both are interchangeably being used in numerical. However, there is a difference between these two terminology, but for numerical purpose you should not consider any difference. So for getting exact definition of this thing, difference between scrap and salvage value, please go through the real estate valuation chapter number 8 part 1 session 1 for details of the difference between these two terminologies. Data given in the question is equal to life of the building is given n 60 years, age of the building is also given m 10 years, replacement cost is given 2.5 lakh rupees, interest rate IS is given, and then scrap value 10% is given. So the same method we use in example number 7, we will calculate ASF, SFF, same figures will come, APA will also be calculated same way and same value will come. Only difference will happen in step number 3. So here for calculating the total percentage cumulative depreciation till mth year will be equal to 1 minus S, 1 minus salvage. So 10% is salvage, so 90% will come here, and SFF and APA will remain same. So total cumulative depreciation will be 3.82 as against something 4%, 4 point something percent in previous example. So it will be 3.82% of the replacement cost till mth year. So depreciation amount is equal to 3.82% till 10th year. So depreciation amount is equal to 3.82% of replacement cost, which is given in the question equal to 2.5 lakh rupees. So that means 9,550 rupees is the total depreciation amount till 10th year of the building. So DRC of the property is equal to replacement cost minus depreciation amount, which we have calculated in step number 3. That means it is equal to 2.5 lakh rupees, which is given in the question, minus depreciation amount calculated above. So that means total value DRC depreciated replacement cost of the property is equal to 2,40,450 rupees. Next example, if life of a building is 60 years, calculate percentage depreciation in 10th year and total depreciation in 10th year, use sum of digit method. So this is the fourth method we discussed in last session. 1 mark question can come out of it. Total life of the building is 60 years given in the question, and depreciation method is given in the 10th in the question is sum of digit method we have to use. So we have to calculate percentage depreciation in 10th year and total depreciation, cumulative depreciation up to 10 years. So the formula we have already understood in previous session, that percentage depreciation in mth year is equal to m divided by n AP series, summation of n AP series, which is equal to n plus 1 divided by 2 into n. So age of the property is 10 years. So percentage depreciation in particular 10th year will be equal to 10 divided by summation of 60, which is equal to 10 divided by 1830. It is equal to 0.5% is the depreciation pertaining to only 10th year, not 9th or 11th year. Only 10th year depreciation will be equal to 0.54%. And if you want to calculate cumulative depreciation till 10th year, then we use this formula, m plus 1 multiply by m, which is age of the building, divided by n plus 1 into n, which is life of the building. So that will give us the 3.05. So first, second, third, fourth, fifth, sixth, seventh, eighth, ninth, 10th. So total depreciation till 10th year will be equal to 3.01%. Let us also check out some case studies. This is an 8 mark case study which can come in exam. Plinth area of a RCC roofed load bearing residential structure is 16 years old, is 21,200 square feet. Life of the building is 60 years. Salvage value is 10%. Calculate depreciated value if unit replacement cost is 1,800 per square feet. For the above building, if age of first floor is 10 years, what will be the depreciated value of first floor of built up area 1000 square feet, assuming the unit rate of construction of 1400. So this is a very important question and may come in exam, because the trick in this question is that there are two parts of the building and both the parts are having different age. So we will try to solve with the help of try to understand this concept of valuation of property with different age construction. It's quite possible ground floor was constructed 20 years back, first floor was constructed 10 years back. So how to value those properties? Data given in the question is that present age of the building is M, which is equal to 16 years. Life of the building N, so total 60 years. Total built up area of the building is 1200 square feet. Salvage percentage given in the question is 10%, and replacement rate given in the question is 1800 rupees per square feet. So depreciated value using SLM and WDV we have to calculate. So the 2 plus 2 4 marks question is this, and depreciated value of first floor using SLM method we have to calculate, assuming age of first floor 10 years, built up area of first floor 1000, and replacement rate of first floor 1400. So first of all, let us calculate depreciated value of the full building. So replacement cost of the property is plinth area, right? So because in part 1 there is no mention of first floor, so we'll consider valuation of full building. So replacement cost is equal to plinth area and replacement rate. It is already, both figures are given in the question. That means it is equal to 1200 rupees per square feet multiplied by 1800 rupees per square feet, which is given in the question, is equal to 21.60 lakh is the total replacement cost of the total building. So annual depreciation using SLM method is equal to 100% minus salvage, which is given as 10% in the question, and 60 year is the life of the building. So that means 1.5% per annum, or annual percentage depreciation will be as per SLM method. Since present age of the building is 16 years, 16 years, so that means 16 years multiplied by 1.5% per year, it is equal to 24% is the total cumulative depreciation for 16 years of the building. So that means depreciation cost is equal to 24%, which is cumulative depreciation, multiplied by replacement cost, which is calculated about 21.60 lakh. So 24% of 21.60 lakh is equal to 5.18 lakh. It is the depreciation cost or depreciation amount of the building as per SLM method. So depreciated value of the building is equal to replacement cost minus depreciation amount of depreciation cost. So replacement cost calculated about 21.60 lakh, and depreciation cost we also calculated 5.18. So that means depreciated value of the building as per SLM method is 16.41. So this is answer number 1, point number A. If we calculate the same value using WDV or constant percentage method, then salvage value we have to calculate first. So salvage value in absolute terms is 10% of the replacement cost. So 10% is percentage salvage, which is given in the question, and replacement cost will be calculated above. So 10% of 21.60 lakhs is equal to 2.16 lakhs. This is the salvage value which we are going to get after 60 years of life. So depreciated value of the building is equal to 6 by capital value of depreciated value of the building after 16 years is equal to RCN multiplied by salvage value divided by RCN raised to power M divided by N. M is age, N is life. So all these figures have been given in the question, or we have calculated above. So that means total depreciated value of the building is equal to 11.69 lakhs is the depreciated value of the building using WDV method. So now calculate depreciated value of the first floor. So here first of all we have to calculate depreciated replacement cost new, RCN of first floor, because plinth area and replacement rate of first floor have been given in the question, which are equal to 1000 square feet is a plinth area or built up area of first floor, multiplied by 1400 rupees per square feet is a replacement cost rate or replacement rate for the first floor. That means total replacement cost RCN of first floor is equal to 14 lakh rupees. So first of all we have to calculate this value. Though first floor is 10 years old, so this is a trick, this is a catch in this question. So here first floor of the building is 10 years old. However, since ground floor is constructed 16 years back, so total age of the first floor to be considered for calculation of depreciation is 16 years. So here we are not supposed to commit please note down it and don't commit a mistake. The 10 years is given just to confuse you, just to check your domain knowledge, expertise. So examiner has given this 10 years of data just to confuse you, just to misguide you. So since ground floor is 16 years and the foundation is of 16 years old, So first floor structure is 10 years, but for depreciation purpose we will consider 16 years age of first floor. So this is a trick in this question. So again, annual depreciation will remain same. It is equal to 100% minus 10% divided by 60 years, which is life of the building. So 1.5% annual depreciation for the building, annual depreciation per year. So total percentage depreciation for first floor will be equal to 16 years, which is age of the foundation, not the structure. So age of the building or foundation is equal to annual depreciation 1.5, 24%. So here 24% is the total cumulative depreciation of the first floor as per SLM method. However, replacement cost RCN of the first floor we have calculated above, depending on plinth area and replacement rate of the first floor, which is equal to 14 lakh rupees. So 24% of 14 lakh is equal to 3.36 lakh. So depreciated value of first floor is equal to replacement cost minus depreciation amount, which is equal to 14 lakh rupees minus 3.36, which is equal to 10.64 lakh rupees. So this is answer to the question number 2, point number A. So if we calculate the same value using WDU method, then again we have to calculate salvage value first of all, which is given as 10% of the replacement cost. Replacement cost is 14 lakhs, thus salvage value in absolute terms will be equal to 1.4 lakh rupees. Then depreciated value of the building is equal to this formula we have already derived in previous last session. So RCN multiply by salvage value in absolute term divided by RCN in absolute term raised to power age divided by life. So 14 into 1.4 divided by 14 raised to power 16 divided by 60. So this factor we will get, and value of the property using first floor using WDU method is equal to 7.57 lakhs. This is answer to question number 2, part number B. Next case study is again of 8 marks. Here in first case study, the two structure, ground floor and first floor, which were having different age, were having same foundation. So here we will have front and rear portion. Then we will see how to use this technique in case of two structures are having different ages, and these two structures are having different foundations as well. An RCC frame building consists of front portion at measuring 1500 square feet with 24 years old structure. So front portion is having built up area of 1500 square feet, and age of the front portion is having 24 years, and the rear portion, backward portion, is at measuring 1200 square feet with age of 16 years old structure. So replacement rate of construction is rupees 1600 per square feet. Age of the building, life of the building is 80 years, and salvage value is 10%. Calculate depreciated value of rear portion using SLM and WDU method. Calculate depreciated value of front portion using SLM and WDU method. So here again we will first write down the data which is given in the question. Built up area of front portion has been given, which is equal to 1500 square feet. Built up area of rear portion is given equal to 1200 square feet. Age of the front portion is given, which is MF, is given 24 years. Age of rear portion is 16 years, which is equal to MR. Replacement rate for both the portion is given 1600 rupees per square feet. Life of the building, which is N, is equal to 80 years, has been given in the question. Salvage percentage is given 10%. So depreciated value of rear portion, front portion using both SLM and WDU method we have to calculate. So the key point or trick here is that since foundation of rear and front portions are different, age of rear portion and front portion considered for calculation of depreciation are to be different. So I just repeat, since foundation of rear and front portions are different. So in previous case the foundation of ground floor and first floor was common, and since foundation was 16 years old, so while doing calculation for first floor, which was having actual age of 10 years, we had calculated depreciation considering foundation of the age, not age of the structure. So here, since both the parts front and rear are having different foundations, so we will consider different age for these two purposes, for these two portions of the property for calculation of depreciation percentage. So depreciated value of rear portion. So replacement cost of rear portion can be calculated with the help of plinth area of rear portion and replacement rate of rear portion. It has already been given in the question, so it is equal to 19.20 lakh rupees. Right. So SLM method, depreciation, annual depreciation percentage depreciation will be equal to 100% minus salvage is given in the question, which is 10%, and age, life of the building, which is given as 80 years. So that means 1.125% is the annual depreciation for the rear portion. So since age of the rear portion is 16 years, So 16 years multiplied by annual depreciation using SLM method, that means 1.125 is equal to 18% is the cumulative depreciation for rear portion for 16 years. So that means depreciation amount or depreciation cost is equal to 18% of replacement cost of the rear portion, which is equal to 19.20 multiplied by 18%. So that gives us a value of 3.46 lakh. That means depreciated value of the building is equal to replacement cost of the rear portion or RCN rear portion minus depreciation amount calculated above 3.46 lakh. So that will give us 19.20 lakh minus 3.46 is equal to 15.74 lakhs. So salvage value, if we want to calculate the value, depreciated value of the rear portion with the help of WDV, first of all we have to calculate salvage value of the rear portion in absolute terms, which is equal to salvage value in percentage term multiplied by replacement cost of rear portion. So that is 10% of 19.20 lakh is equal to 1.92 lakhs is salvage value in absolute terms of the rear portion. So that means depreciated value of the building after 16 years, which is the age of the rear portion, is equal to C into SV divided by C RCN raised to power MR, age of the rear portion divided by total life of the building, which is 80 years. So using this formula we can calculate depreciated value of the rear portion of the building is 12.111 lakh. Now let us calculate depreciated value of the front portion, which is having an age of 24 years. So first we calculate replacement cost or RCN of the front portion, which is equal to plinth area of the front portion multiplied by replacement rate, which is given in both figures are given in the question. So that means 1500 rupees per square feet is plinth area or built up area of the front portion multiplied by 1600 rupees per square feet is replacement rate for the front portion. That means it is equal to 24 lakh rupees. So SLM, using SLM method, annual depreciation as we calculated in the last slide is equal to 1.125%, which is equal to 100% minus salvage divided by total life. So now here in this case, present age of the front portion is 24 years. So we will multiply this annual depreciation with 24 years of age to arrive at the cumulative depreciation for 24 years, which is equal to 24 years multiplied by 1.125% per year. It is equal to 27% is the cumulative depreciation for 24 years of the front portion. So depreciation cost for the cumulative depreciation for the front portion will be equal to 27% of the replacement cost RCN of the front portion, which is equal to 24 lakhs multiplied by 27%. So it is equal to 6.48 lakh is the depreciation amount. So that means depreciated value of the front portion of the building is equal to replacement cost front portion minus depreciation amount. It is equal to 24 lakhs minus 6.48 lakh, that is equal to 17.5 lakh is the depreciated value of the front building. So if we'll try to calculate this value with the help of WDV, then again we have to calculate first salvage value in absolute terms, which is equal to 10% of the replacement cost of front portion. It is equal to 10% multiplied by 24 lakh. It is equal to 2.4 lakh. So using the formula of WDV, depreciated value of the building is after 24 years of time period will be equal to RCN multiplied by salvage value in absolute terms divided by RCN raised to power age of the front portion divided by total life of the front portion or building, which it is equal to 12.03 lakhs is answer to question number 2, point number B. Third case study, a load bearing building at measuring 1500 square feet of 20 years old is existing on a plot of 2400 square feet. The unit land rate of plot is rupees 2000 rupees per square feet. Land rate is given, built up area of the building is given, age of the building is given M, and plot land area is given, and replacement unit rate of the construction is 1700 rupees per square feet. Replacement rate is given. It is a collateral security and salvage value 10%. Life of the building is also given N. So calculate market value using SLM and WDV market value, and also calculate force value assuming a reduction factor of 15% using SLM and WDV. So again, first of all, write out the data given in the question, which is area of total building is equal to 1500 square feet. Replacement rate is given 1700 square feet. Area of plot is given 2400 square feet. Land rate is given 2000 rupees per square feet. Age of the building is given M 20 years. Life of the building is given 60 years. Salvage percentage is given 10%. So we have to calculate market value and force value using SLM and WDV methods. So first we have to calculate replacement cost and land value. Since we have to calculate total property value, so we need to have value of land plus depreciated value of the building. So replacement cost new or RCN cost of the structure will be equal to built up area, which is given in the question, 1500 multiplied by 1700 per square feet is replacement rate, which is also given in the question. So that means RCN or replacement cost new of the building is equal to 25.50 lakh. This is value number one, which we will going to use in next two slides. Then land value we can also calculate with the help of data given in the question. It is 2400 rupees, 2400 square feet is the land area given in the question, and 2000 rupees per square feet is the land rate given in the question. So total land value as per data given in the question is 48 lakh rupees. So as per SLM method, annual depreciation we will calculate, which is equal to 100% minus salvage divided by n. So salvage percentage, so it is equal to 1.5% annual depreciation. So total depreciation for 20 years, which is age of the building, is equal to 20 years multiplied by annual depreciation. So 30% is the cumulative depreciation for the building as per SLM. So depreciation amount is equal to 30% of replacement cost, which we calculated in the last slide. So that means 30% of 25.50 lakh. It is equal to 7.65 lakhs. So depreciated value of the building is equal to replacement cost minus depreciation amount or depreciation cost. It is equal to 25.50 lakh minus 7.65 lakh. It is equal to 17.85 lakh. So this is the depreciated value of the building. So if we will add land value to this value of depreciated value of the building, we will get total market value of the property, which is equal to land value is equal to 48 lakh and depreciated value of building is 17.85 lakh. Thus total value of the property, market value of the property is 65.85. So now for calculation of force value, 85% of the market value has to be considered as per data given in the question. So that means 85% of 65.85 is equal to 55.97. So this is this 65.85 is answer to question number 1 part A, and 55.97 is answer to question number 2 part A. Let us try to calculate these two values with the help of WDV method as well. So in case of WDV, first we have to calculate absolute salvage value. So salvage value is percentage salvage value multiplied by replacement cost. Both data has been given in the question. So 10% of 25.50 lakh is equal to 2.55 lakh is the salvage value in absolute terms. So depreciated value of the building we can calculate with the help of this formula given in the question, which we have already understood in the previous session and existing session. Replacement cost multiplied by salvage value divided by replacement cost raised to power age divided by n. So this is the value of building depreciated value of the building, which is equal to 11.84 lakhs. So market value of property is equal to land value plus depreciated value of the building as calculated with the help of WDV method. So land value will remain same, it is equal to 48 lakhs plus depreciated value of the building is 11.84 lakh as calculated above. So total market value of the building as per WDV method is 59.84 lakhs. However, for calculation of force value, we have to calculate 85% of market value, which is 59.84. So thus total force value of the property is equal to 85% of market value. It is equal to 50.86. So these are the answer to question number 1 part B and question number 2 part B. Thank you very much for watching today's video and today's session. So with this we have concluded our second fourth chapter, part 4 of chapter number 8, which is cost approach to valuation. And before I tell you what we are going to have in our upcoming next sessions, I would request you to please subscribe to the channel and click on bell icon so that you will be immediately notified about my upcoming sessions. So next session we are going to start with the principles of insurance and loss assessment. So though as per IBBI exam it carries marks of only 3 as per theory, however numerical may come out of it, and it is very important. A case study may also come out of this chapter. So we are going to discuss entire theory and principle, what are the key aspects of insurance, insurance loss assessment of the property valuation, and what are the different type of numericals, formulas, case studies which can appear, which can come in exam, and very easy and simple topic. And we will try to be specific to the points, because this is a vast topic, but we will try to be very specific to the points which are relevant to the IBBI examination for examination purpose. Thank you.